Hey everyone, this is June from Turning Point Life Investment, and this video is for September 20th, 2008. Now I'm going to do a video on the gold and silver sector, only because this past week we had a lot of media coverage on gold and silver. And that's one of the things that you want to do is whenever you hear about these massive rallies that occur in a particular stock or sector, you always want to do your own analysis, right? Always want to be objective and see, well, is it just all hype or is there really substance behind what they're reporting? So looking at the gold and silver sector, this is a 10-year monthly view, so this is a very long-term view. We noticed that gold and silver, I'll just say gold from now on, we had a very nice rally ever since 2001. Notice how the rally has been pretty steady, and every time we notice that it pulled back to this 50-month, the blue line, the 50-month moving average, it provided us some great entry points into the stock. And guess where we are right now? We are right at the 50-month moving average. Now, seeing how this is a monthly candle, it's not exactly complete yet until the month of September is over. So right now it's too soon to say that this is a bullish hammer candlestick. But what you want to look out for is you want to make sure that this candle stays above the 50-month moving average by the end of September. Why? Because at least we know that we're managing to close above it. If we close underneath the 50-month moving average by the end of the month, that's actually potentially very bearish. Okay, so that's not something that you want to be in, because we've never really closed underneath the 50-month ever since this rally started. Okay, and if it happened this month, then that's actually bearish. Looking at stochastic, it's pointing downward, so there is some bearish momentum that's going on. Same thing with the MACD that's trading into the negative side. Let's look at the weekly view to see what's going on. Okay, weekly view, we noticed that we had very good support right here at 120. Okay, notice how it's been testing several times. We actually tested it this week. We had a very nice hammer, a couple of hammers this week and last week. But once again, look at where it is in relation to the moving average. We are underneath the moving average, whereas we are above it here. Okay, and obviously you knew that a rally was about to happen. Look at how far stretched out it was from the moving average. Okay, you can't really have that extreme conditions. It has to come back and tag the 20-week. So expect this rally that we're having to find some kind of resistance right around here. That's probably where the prices and the 20-week moving averages are basically going to collide and meet each other. Your first clue as to when to get out of gold was right here. We had sort of a double top kind of looking pattern, right, when we failed to break 200. But even if you didn't know that, notice how we have a series of lower highs and lower lows. Okay, this failure to break above 200 was your first clue to the weakness that was going on as far as gold. Okay, especially when it broke underneath this 50-week moving average and as well as the 170 support. Okay, now we're going to go into a daily view. We notice that the massive rally or decline that's been going on, it's been trading underneath the 20 and the 50-day moving average. Okay, so these last couple of weeks we have some massive rally from the support at 110 here. So once again, this is probably a rally that's occurring in a downtrend. Okay, so there's even in declines we have massive short coverings and massive rallies that can occur, and that typically can trap or fool people thinking that this is a bottom. So don't be one of those people who get fooled into thinking that this is a start of a new trend. Not until we're able to trade above here, okay, above this level, can we say that this was the bottom and now we're starting a new trend, right? We're still trading underneath this 50-day moving average here. So if you managed to buy gold earlier this week, I would suggest you start locking in some profit if prices come back up around this 150 area, just to make sure you lock in a little bit of profit. Okay, you don't want to give it all up if the market continues to trend lower. So the point that I want to make here is just do your own homework. Okay, don't get caught up in the hype and the excitement that's on CNBC or on newses and from what your neighbors are telling you. So just always do your homework, do your own research, and look at the charts and let the charts tell you whether you should get in or get out of a particular stock or sector.